Meta stock has been struggling lately as it is down 19% in the past 6 months and hasn't done anything in the past year, in fact down 11%. So let's see if the company is a buy at today's price, which is $639 per share and now has a market cap of $1.6 trillion and they are generating $200 billion in revenue, up 22% from the last year. Now, full disclosure, I used to have a position in Meta. I made a video 2 years ago in which I was buying Meta sub $150 per share, and I also recently made a video saying I sold Meta stock. So it's been one of my best performing stocks in my portfolio in the past couple of years with returns of around 400 or 500%. A lot of value investors are saying that the company is now cheap as it is trading at a 4P of 21, which to be fair looks cheap for a high growth company, and analysts have them rated as a strong buy with 31% upside, although we'll talk later about the valuation with the discounted cash flow model. And Meta is a company whose growth is insane. They have grown from $27 billion in 2016 to $200 billion today. Now, this company struggled for a year, but then has seen a re-acceleration in growth. And in fact, in the past 2 years, this company is growing at double digit, which is honestly insane and very impressive for a company that is this large. Now, regarding profit, again, they have seen amazing growth from $10 billion to $60 billion. Now, a thing that I don't really like about Meta is that they have less free cash flow, currently sitting at $46 billion, but this is because the company is reinvesting a lot of their money currently in AI. In the past, it used to be about Reality Labs, which was the reason the stock was down in the past. And their margins are amazing. Gross margin is currently at 82%, profit margin at 30%, and free cash flow margin a bit lower, currently at 22%. But again, this is because they are reinvesting all that money into AI spending. And last quarter, they reported very solid earnings. Family daily active people was 3.5 billion on average, which is insane. It's basically half of the world that are using their platforms, Instagram, Facebook, WhatsApp, etc. An increase of 8% year over year. So the fact that they are still growing with these numbers is insane. Also, ad impressions delivered across our family of apps increased 14% year over year, and the average price per ad increased 10%, which is the main reason why revenue was 51 billion. Again, as we've seen before, an increase of 26% year over year. Now, in terms of cost and expenses, as I've said before, they spent $30 billion, an increase of 32% year over year. Now, all companies, and especially the Magnificent Seven, are spending tons of money on AI. And it's only hard for me to value this type of investment because we don't know what returns they are going to get with this. It could be huge, but it also could be zero. They are still not making money on these investments in AI, which in my opinion makes it very hard to value this aspect of the companies. Now, as far as share repurchase program, they repurchased $3 billion and they also pay a dividend, which made up $1.3 billion. Again, I don't really like this because why are they buying back shares or paying a very small dividend? I mean, that's like a 0.3% yield. The reason I don't like this is because Meta still has a lot of upside potential for growth. And I would rather if they spend all these billions of dollars reinvesting in the business instead of paying a dividend or buying back shares, which is something companies do when they have no more growth and something they are doing just to please investors. And just to point out, a negative aspect about the business is the Reality Labs segment, which currently is not growing very fast. 2% last quarter year over year, which is not great, especially compared to the other segments. For example, the advertisement segment is growing at double digit and payments and other even at 50% and has now surpassed the Reality Labs segment. And it is no surprise that if we look at the financial forecast, analysts are still expecting tons of growth for Meta, both in revenue and profit. As far as revenue, from $252 billion to $348 in the next couple of years. So basically around double-digit percentage growth. Now, as far as EPS, from $30.55 per share this year to $40.48 per share. And another huge positive for Meta is their balance sheet, as they have $81 billion in cash and $85 billion in debt. So basically no debt considering the amount of cash they have, and that this is a $1.6 trillion market cap. By the way, where I'm showing all the statistics in this video and all the financial data is at stockanalysis.com. You have my code in the description. So Meta is one of the best companies in the world. There is no denying that. And therefore, the only question left is, can we pay a good price in order to make a good return on our money? In order to answer that question, I use my Google Sheet or discounted cash flow model, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And according to my low assumptions, the intrinsic value is $426 per share, middle $694 per share, and high $1,096 per share. Now, because the stock is currently trading at $640 per share, it means that if my low assumptions occur, you would get a 3.1% annual return on your money, middle 11.4%, and high 19.7%. Now, as far as my assumptions, I assume Meta grows revenue between 7 and 15% annually over the next 7 years. The average of profit margin and free cash flow margin between 24 and 32%, and I assign the PM price to free cash flow at the end of the 7 years of 20, 23, and 26. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumption. And my conclusion is that Meta, as you can see here, is trading at around fair value. However, it is true that I do have a bias as I've owned the stock in the past and I've sold it, so it is hard for me to buy at current prices. Now, I do think that Meta is trading around fair value, but it is hard for me to determine whether those AI investments will turn out great in the future. And also, I like to invest in companies that I believe are heavily discounted. For example, Meta, when it was trading around $150 per share. So one thing that I want you guys to take away from this video is that the same company at different prices can make a great or a bad investment. I hope you found this video valuable. Let me know what you think about Meta stock in the comments, and I'll see you in the next one.